Bitcoin is acting weird today, and not in a cute bull run loading way. We're sitting at $86,068. The trend strength is literally 1 star sideways. Volume is mid-tier. Volatility is basically asleep with a TR at 0.7%, but RSI is almost screaming oversold at 32.26. It's like price is saying, yeah, I'm weak, but don't expect fireworks. What makes this even crazier? BTC is minus 4% under the 50-day SMA, and we're seeing weakness across every time frame, but without the explosion you'd expect before a trend shift. This is the type of setup where crypto Twitter gets loud, but the chart silent. And silence usually means one thing: pressure's building somewhere. Before we zoom out, here's what anchors the entire move. Price is sitting closer to the bottom of the weekly structure than the middle. That alone flips the sentiment from maybe a cool down to this might be actual compression. So let's break it down cleanly. Right now, December 1, 2025, 14:33 UTC, Bitcoin trades at $86,068, sitting minus 4.00% below the 50-period SMA at $89,658. We're stuck inside a weekly price range of $84,756 to $93,092, floating closer to the floor than anything else. Whenever BTC hugs the lower boundary like this, it usually means sellers aren't done yet. Here's the full weekly grid. Low, $84,756. High, $93,092. Fibs across that range land at 0.236. Right arrow $91,125. 382. Right arrow $89,908. 5. Right arrow $88,924. 618. Right arrow $87,940. 786. Right arrow $86,540. Where are we? Below almost everything. This is the kind of placement where the chart says, if buyers want to flip momentum, they need to show up now. Short-term battlefield looks like this. Support, $84,756. Weekly low, resistance, $86,540. 786 Fib. BTC is literally squeezed between the lowest weekly level and the weakest Fibonacci line. It's not a trend, it's a standoff. If buyers reclaim the broken range and flip momentum, these are the next magnets. 1. 272. Right arrow $95, 359. 1. 414. Right arrow $96, 543. 1. 618. Right arrow $98, 243. These aren't moon targets, they're structural recovery levels. And the crazy part: we hit them fast if volatility returns. $84,756 cracks, the floor opens to 0. 618. Right arrow $79, 604. 1. 0. Right arrow $76, 421. 272. Right arrow $74, 153. 1. 618. Right arrow $71, 268. These are the levels where panic meets opportunity, depending on your risk appetite. Yep. But yeah, they're close enough to matter. RSI sits at 32.26, not oversold yet, but one more decent nudge and we're there. This usually means sellers are pushing hard, but not at exhaustion. Think of it as late-stage pressure, not capitulation. We're minus 4.00% under the SMA 50. That's not catastrophic, but it's meaningful. Traders don't ignore that kind of deviation, because historically it's where trend reversals like to form or where breakdowns accelerate. MACD paints the same picture. MACD line, minus 1, 205, 5,178 signal, minus 1, 176, 6,221 histogram, minus 28, 8,957 bearish, clean and unambiguous. MACD under the signal line means momentum's still drifting downward. This is the plot twist. Despite all the bearish elements, the market is technically classified as sideways. No real directional commitment. No trend power. Just drift. This environment is where fakes outs thrive. Volume. Medium. Enough to matter, not enough to move mountains. Volatility. At or at 0.7%. In crypto terms, that's practically a coma. Low volatility plus weak trend equals the calm before something breaks. Everything points to the same conclusion. Bitcoin is sitting below the weekly range with low volatility, medium volume, near oversold RSI, bearish MACD, negative SMA deviation, and no trend strength. This is controlled selling, not panic selling. Quiet pressure. And quiet pressure usually ends loud.